Heya Cryptozens, welcome back to the Crypto Overnighter. My name is Nikodemus and we do crypto news analysis nightly at 10 p.m. And keep in mind, none of this should be considered financial advice. On Wednesday, a lawsuit was filed against a group of social media influencers. This suit accuses them of promoting FTX to their followers without disclosing any payments or compensation. The influencers named in the lawsuit include Erica Kullberg, Ben Armstrong, or BitBoy, and Kevin Paffrath, or Meet Kevin. Now, according to this suit, some of the creators have removed all of the video clips that endorse FTX and praise its CEO, Sam Bankman-Fried. Instead, they posted messages apologizing for promoting the crypto exchange. Now, FTX is currently being investigated by regulators in the United States and other countries and may owe up to $3.1 billion to its top 50 creditors. The lawsuit claims that in a YouTube video dated November 22nd, Paffrath said that he used to be sponsored by FTX, which he now considers a disgrace and a scar. He also expressed regret, saying that he would change it if he could because people were hurt as a result. And now this video is being cited as evidence in the lawsuit. The lawsuit is trying to obtain class action status and involves plaintiffs from both the US and other countries. The plaintiffs are represented by Adam Moskowitz from the Moskowitz Law Firm, who is also involved in another FTX-related lawsuit. This other lawsuit accuses celebrities like Tom Brady and Gisele Bündchen of promoting FTX, so there's a theme here. This lawsuit claims that FTX paid the defendants a lot of money to promote its brand and to encourage their followers to invest. The problem, according to the suit, is that the defendants did not disclose the nature and the extent of their partnerships, endorsement deals, or compensation. As the lawsuit puts it, this might be the only way any of FTX's victims get any of their money back. So there's this rumor going around, and the rumor is that the Federal Deposit Insurance Corporation said whoever buys Signature Bank would have to give up the crypto business. Well, that's not exactly a rumor, it came from a Reuters report. This report claimed that the FDIC would require any buyer of Signature to give up all of the bank's crypto business. The FDIC has denied this claim through a spokesperson, and that spokesperson said the receivership doesn't end until all of the bank's assets are sold and claims against the bank are resolved. The acquirer will then decide the terms of their bid. According to the FDIC spokesperson, the acquirer will communicate to the agency what assets and liabilities they're willing to take from the failed bank. The spokesperson referred to the agency's resolution handbook. The spokesperson also mentioned that the FDIC, along with the Office of the Comptroller of the Currency and the Federal Reserve, published two joint statements. One of these statements confirmed that the banks are not being discouraged from providing services to any sector. Reuters has since reported that an FDIC spokesperson told them that there would be no requirement to divest crypto activities as part of any sale. Over the weekend, the New York Department of Financial Services seized Signature Bank and handed it over to the FDIC. Barney Frank is a former Democratic legislator, so he knows something about politics. He's also a board member of Signature Bank, and he has suggested that this was a political move due to anti-crypto sentiment. However, a department spokesperson explained in a statement that the regulator lost faith in the bank's leadership after a bank run occurred last Friday. Currently, the FDIC is planning to auction off Signature Bank. Jason Brett is a former regulator at the FDIC, and he said that U.S. regulators might be using the recent financial turmoil as a way to push crypto companies out of the banking system. He explained that the issue was the lack of support for crypto in the financial system. Now, Brett claimed that the U.S. regulators' efforts to prevent crypto companies from accessing the country's banking system may have started before the recent bank collapses. He cited the example of former FDIC Chairman Jelena McWilliams. Now, she was a supporter of crypto, and she promoted it when she was in her position. She was appointed by former President Donald Trump, but resigned on February 4th, 2022. Now, Brett claimed that McWilliams was removed from her position in what he called almost a coup d'etat. He further claimed that the Consumer Financial Protection Bureau took over the FDIC's agenda after she was removed. Brett stated that Martin Gruenberg is not a supporter of fintech or cryptocurrencies. Now, according to Brett, not all banks were closed down because of crypto. Even still, The recent bank failures do bring up questions about how much attention regulators paid to the banking industry. Brett doesn't think that this is a crypto or a financial crisis, but rather a crisis in the banking industry and how they manage their books. The Blockchain Association is a big crypto lobbying group, and they're concerned about the possibility that crypto companies may lose banking access due to the recent failure of the banks. So they sent a FOIA request to the FDIC, the Federal Reserve, and the Office of the Comptroller of the Currency, because they're looking for documents and messages related to the issue. Now, Kristen Smith is the CEO of the Blockchain Association, and she said in an email that they're trying to figure out if crypto companies are being debanked in the US. She said that they've seen some signs of trouble and want to know more about the situation. They're also looking into allegations of account closures and refusals to open new accounts. This is what they think might have caused the failures of Signature Bank, Silicon Valley Bank, and Silvergate. Jake Chervinsky is the Chief Policy Officer at the Blockchain Association, and he said that there are reports of crypto companies losing their bank accounts without any warning or explanation. Chervinsky tweeted that this is a worrying trend and that it implies that regulators want to exclude crypto from the banking system altogether. He also accused regulators of violating the law by debanking crypto firms. Regulators have expressed their worries about the crypto industry. In a statement in January, the Fed warned that banks with crypto exposure faced significant risks due to the market's volatility. In February, the FDIC, the OCC, and the Federal Reserve released a statement highlighting the liquidity risks to banks and reminding them to use appropriate risk management methods. Now, regulators stated that banks are not discouraged or forbidden from serving any particular class or type of customers, as long as it's legal. Jake Chervinsky tweeted that the Blockchain Association wants to verify if this statement is accurate. Johan van Overveld is the former finance minister for Belgium. Now a minister of European Parliament, he tweeted on Friday that crypto should be banned because of recent banking problems. Now, he's the spokesperson for a group of 64 EU lawmakers. And his comments come as Parliament gets ready to vote on new rules for crypto in the EU. Van Overveld said that we should learn from the current banking situation and make sure that crypto is strictly prohibited. He said, quote, "Another lesson to be learned from the current banking commotion, enforce a strict ban on cryptocurrencies." He said crypto is all about mere speculation with no economic or social value. He also said that if a government prohibits drugs, it should also ban crypto. Now, this comes after the failure of Silicon Bank and Silvergate Bank, which has had an impact on European markets. Credit Suisse's shares reached an all-time low, and they had to borrow $53 million from the Swiss National Bank. Van Overveld is a member of the Economic and Monetary Affairs Committee for the European Conservatives and Reformers. That's the fifth largest political group in the parliament. And he was the finance minister of Belgium for 4 years. Now, the group is focused on individual liberty, private property, and limited government. Next month, the European Parliament's 705 lawmakers are set to vote on the Markets in Crypto Assets regulation. This new regulation will create rules for wallet providers and exchanges that follow consumer protection and governance norms. Now, interestingly, Van Overveld did play a leading role in the Parliament's creation of a new law. This new law allows trading securities based on distributed ledger technology, because he has stated that the technology behind crypto has the potential to improve productivity. Now, the MP there was just talking about drugs. U.S. Senator Michael Bennet is unhappy with banks that work with cryptocurrency but won't help the marijuana industry. Now, he shared his concerns during a Senate Finance Committee meeting on Thursday. This committee discussed topics like taxes, interest rates, and bank failures. And Treasury Secretary Janet Yellen answered lawmakers' questions. So Bennett thinks that it's unfair that banks can work with crypto, but not marijuana businesses. Now, Senator Bennett commented on the fact that Barron's reports that about 20% of Signature Bank's deposits were from crypto companies. He says that it's unfair that banks can't work with the marijuana industry, but can rely on crypto, which is unstable and not well understood. He referred specifically to Signature Bank, which collapsed and had a significant amount of deposits from crypto companies. The American Bankers Association says that marijuana is legal in 37 states, but it's still illegal under federal law to possess, distribute, or sell. Some lawmakers are trying to create a law that would let banks offer banking services to marijuana businesses. However, banks are often hesitant because of legal and regulatory risks. So Senator Bennett asked Treasury Secretary Yellen what she thought about Signature Bank investing in crypto when it's not as stable as the marijuana industry. And Yellen responded by acknowledging that marijuana is illegal under federal law, which makes it difficult for the industry to access appropriate banking services. She added that regulators are trying to find ways to solve this problem. The United Kingdom is creating a new crypto framework. The Treasury added a category for crypto assets in the tax return forms. And that's how you know something's real, when the government taxes it. Now, this new line will show up in tax forms in 24 to 25. The UK Treasury released a report on March 15th about the spring 2023 national budget. This budget talks about changing the self-assessment forms for crypto assets. The anticipated expenses and revenues table in the national budget shows the crypto assets line starting from 2025 to 26. Therefore, citizens of the UK must report their crypto assets in the previous tax year, which is 2024 to 25. The Treasury has not disclosed the anticipated budget revenues from this tax category. The numbers in the table only show 10 million British pounds as a nominal mark. The Chartered Institute of Taxation analyzes national tax policies, and they welcome these changes. Gary Ashford is their deputy president, and he said that highlighting the need to declare crypto assets transactions in tax returns would increase awareness of people's obligations in this area. Ashford acknowledged the need for additional measures to counter widespread ignorance of tax payment and reporting requirements for crypto. Ashford believes that low-income crypto investors lack sufficient understanding of tax reporting, which sounds kind of classist to me. Now, the Financial Conduct Authority informed the Treasury earlier in March that it is currently in the middle of an ambitious reset, referring to the fact that the Financial Services and Markets Bill is going through Parliament. Once the bill is passed, the FCA will have new regulatory powers over the cryptocurrency industry. Now, this story is fun for me because it sort of combines an aspect of the work that I'm doing at the fiat mines with crypto. Cointelegraph ran an experiment to understand the potential biases of GPT-4, which is the newest version of the ChatGPT, specifically looking for biases towards or away from different cryptocurrencies like Bitcoin, Ether, and Cosmos. The experiment also aimed to see how recent events could affect investment decisions and whether GPT-4 could adapt its strategy to make a profit. Now, according to the experiment, GPT-4 thinks that the events of the last 7 days might be bullish for Bitcoin, Ether, and Cosmos. On March 17th, the experiment started by asking ChatGPT to invest $100 to make the most money in the shortest time possible. This prompt was written in a way that the chatbot would feel comfortable giving trading instructions. Now, as the knowledge and the training of GPT-4 only go up to September 2021, Cointelegraph provided it with year-end roundups for 2021 and 2022, along with their markets news and most read stories from the past 7 days. The purpose was to see how ChatGPT would invest based on these latest events. The crypto market has been unstable lately, largely due to various factors affecting the prices. The recent failures of the Silicon Valley Bank and Signature Bank have led to more uncertainty in the financial sector. This, along with the regulatory pressure and macroeconomic factors, has caused fluctuations in cryptocurrency prices. So, considering the context, ChatGPT's advice on how to allocate the $100 was as follows: $50 for Bitcoin, $25 for Ether, $15 for Cosmos, and then $10 for what they called NFT and Web3 related projects. GPT-4 said that despite current volatility, it still has strong long-term potential. Quote, "The overall trend shows that Bitcoin acts as a safe haven during times of financial instability, such as the recent Silicon Valley Bank and Signature Bank failures. Additionally, Bitcoin's dominance is nearing 50%, and some analysts predict a move towards 100K. Now, additionally, ChatGPT advised that Ethereum's upcoming Shanghai upgrade could reinforce its dominance and help liquid staking providers. It also said that Ethereum's price is recovering, making it a suitable addition to the portfolio. Moreover, ChatGPT recommended setting aside $15 for Cosmos due to the launch of interchain security, which it believes could bring potential growth opportunities for Atom. It described Cosmos as a promising project in the blockchain space and stated that the launch could attract more investors. Furthermore, ChatGPT said to invest $6 in Decentraland due to the growing interest in virtual worlds and NFTs. It also suggested investing $4 in Chainlink. ChatGPT said the adoption of Web3 and decentralized applications, as that increases, the demand for dependable off-chain data will continue to rise. The Link token is used to pay for services within the Chainlink ecosystem, making it a good investment as the need for Oracle services expands. Now, Cointelegraph purchased the recommended cryptocurrencies on an exchange and is now monitoring the fund's performance using a portfolio tracker. At the time of writing, there has been a slight paper gain. Now, I'm going to be really interested in watching this one, and if it's successful, I want a copy of their trained language model and their prompts for scientific purposes. And that's going to do it for us on a St. Patrick's night. I hope it was lucky for you. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating or a review. And in the meantime, we'll see you tomorrow night.